at right now. Rahul Arora is CEO, Nirmal Bang Equities. He's with us here in our studios. Rahul, great to have you with us here. Thanks very much. Let's start with small caps. But what else, right? 4.5% last week, Friday to Friday. And the pace has picked up to almost a frenzy. What do you make of the move, and what are you really picking up when you talk about this at Nirmal Bang with your team? What's the feedback, General?
So first off, morning, and thank you for having me on the show, Prashant. I think the point is that the market was looking very top-heavy when it went close to 20,000. And you're seeing this in a spate of new IPOs, right? The kind of subscriptions that you're seeing. So I think at some level, the market is, for lack of a better term, bereft of ideas. So I think that's why you're finding a lot of the interest that's coming in at the lower end of the mid-cap and small-cap. This may continue. I think if you look at, let's take a case in point of ICICI Bank, right? If you take last 3 quarters results, they've actually beaten estimates quite comfortably, but the stock hasn't done that much. But as you rightly point out, the delta is coming at the bottom. I think, Prashant, what's likely to happen is with commodity prices coming in favor, I think the biggest earnings delta is going to come for some of these guys. So even when we look at some of our small cap companies under coverage, say between FY23 reported and FY25 projected, a lot of these earnings are projected to go up by anywhere between 50 to 100%.
Genus is a case in point. Genus did, I think, ₹1.5 in EPS in FY23, but FY25, I think they projected to do, almost 8-9 rupees.
Absolutely. I mean, there are so many of these, right? Another one that comes to mind is Power Mech, APA. There's so many of these that would probably have EPSs doubling between 23 and 25, and that were coming to you at, throwaway valuations. And I think the point here being, let's take a case in point of Eris Life Sciences. It's a stock that we track, that we really like. We're looking at almost a 35-40% earnings compounded. So I think in every sector, the valuations in small caps had reached levels where they were very attractive, and now they were supported with earnings growth. A lot of it maybe because of commodity prices coming in your favor. So I think you're going to land up in a situation where gross margins are going to expand. And if, like I said, between gross and the EBITDA level, if there's nothing that goes awry, the market's paying multiples for that. So I think large caps, that's why you're probably finding them struggling. And I just gave you one example. There are others as well. But I think this could land up being the flavor. The good part is NFOs are still coming, even at this level. And that's where I think you're going to find a lot of the interest.
Okay, by the way, the stock of the moment is Nazara Tech. It's up almost about 4% right now. So just want to pull that up on the screen. And as we've told you earlier, Nazara Tech will be issuing almost 14 lakh equity shares to Nikhil Kamat's companies. And of course, that will be in their personal capacity. The stock is now up 4.5%. Rahul, hi, welcome to the show. The bigger theme here is what the consumption patterns will look like for the next generation, right? And gaming clearly is one of them. Of course, Nazara is in the listed space. There are so many others in the ancillary space as well. But is this a story worth betting on despite the run-up that we've seen? So
I think consumption as a theme has changed, right? Pre-COVID, post-COVID. Yeah. And I think the way people are consuming, even the consumables has changed. And you're seeing this in hotels, aviations, and a lot of other sectors. Unfortunately, when you look at sectors like gaming or allied sectors like, let's say, Delta Corp, there's not too much of a market representation there, right? So the trade tends to get crowded in these many stocks. Goes back to, say, when real estate listed a decade or 15 years back, you used to assign scarcity premiums. That's a term you had heard a lot back then. So I think these are probably beneficiaries of that. How big these could become, I don't know. I mean, if this is a US or China-like story, this could implode, right? But I don't know how big gaming can actually become in India as we speak today. Some of the others, in terms of sectors, when you talk about consumption, there I have no doubt whatsoever. Like which ones do you still like despite the rally? So I still think, okay, this may sound a little weird coming from me, but I still don't think we've scratched the surface on QSRs, because people talk about valuations. Just to give you a case in point, if you look at Domino's same-store sales growth in the US for the last 6 or 7 years, so we're talking a reasonable time. I think it's almost 30 quarters. The same-store sales growth trajectory will shock people. I don't think it's reported a negative SSSG for the last 30 quarters in the US. So if that market is not saturated, I don't know if you've even scratched the surface here. I think the takers that you have for hotels in India, the kind of rates, I just heard Prashant talking about EIH, right? I mean, you're getting into the peak period for hotels. You have a G20 in Delhi. Some of that delegation finds its way to Bombay, and then you're into a World Cup. So I think there's a lot of this, and obviously air travel is going to be extremely strong. So I think the next 3 to 6 months from a consumer discretionary standpoint is going to be extremely strong. But I think, Sonia, I'm not too sure about how big gaming can become. It's a fascinating space. I understand that. But maybe because it's probably the only listed play, that and Delta Corp. I think from time to time, if people want to play this, they'll probably keep coming back to this. So it becomes a crowded trade. But, you know, we saw this with Dixon Technologies. It went from 1,500 to what, 25,000 and in one rally because nothing else was listed. But when people start having other options, that's when these stocks will really get tested for price.
Hi, Rahul. Good morning. The two themes that you spoke about, QSR as well as hotels, couple of stocks that you'll like from there. I think Indian hotels, you'll played it well, but then I think you'll decided that enough is enough. I think it's time to check out. What's your view currently?
So I think, Nigel, it's probably not a bad time to start looking at Jubilant Foodworks. Okay. I think it's been one of the biggest underperformers in the market. I do understand in the last quarter, Amul also took some price hikes on milk. So there's probably, some concern on the way cheese prices are. But I think if they're able to sort of cut back a bit on their store openings, I think this is such a fantastic business in terms of cash generation. Okay. And it's been one of the underperformers for quite some time on a relative basis if you compare it to their other peers. I mean, there are only two or three very solid, profitable aggregate QSR players in India, Jubilant and Westlife being two of them. But I think because Westlife is, knocking at the doors of 1,000, I'd say probably on a relative basis, I think Jubilant Foodworks looks like an interesting play. The only caveat being that because we're looking at maybe a little bit of a slowdown over the next year or so, and I would like to see them pull back a bit on their store openings. On a relative valuation basis, I don't think there's too much to be made in hotels. I think Indian hotels at 400 plus. I think Q3 of this fiscal or Q4, the calendar, whichever way you want to look at it, is going to be the peak quarter for a very, very long time. I think from there, I think if people are going to extrapolate these numbers into FY25, 26, I think there's going to be room for disappointment. But I think we could still look at playing Indigo. I think there's still enough and more room to be playing that stock, and I think there's still value to be had there. So I think if you were playing maybe Jubilant Foodworks at this price, maybe an EIH, if you wanted to play hotels and Indigo, that's probably the way I'd play. And I think the fourth is because we're entering a wedding season and Diwali and all that, I think Titan is just operating on a planet of its own. And maybe you could extend it to Trent. So I think if I was looking at 5 consumer discretionary names, these would probably be the 5 names I'd definitely be interested in.
No PVR?
I think, Prashant, from 1,200 to 1,700, I know you've had, Gadar do about 500 crores and some of the others like Oppenheimer, Barbie and some of the SRK movies, and there's one releasing this weekend. But the 52-week high is about 2,000, 2,100. So can it take it out? For sure. But I think most of the delta, like I was saying, is, it's moved up about 450, 500 bucks. So I think a lot of that probably is in the price. I mean, if you want to play consumption, right, let's take a look at 2 results that came out last week, P&G and Gillette. I mean, those were probably the 2 best results you had. And along with Polycab, I think those are probably the 3 best results of the season. The kind of margin expansion that both P&G and Gillette showed you, remarkable. I mean, it's... I think what was very interesting is when I saw the SBI Bank's presentation, and I don't know if a lot of people caught this, there was actually a section of what they're doing on female hygiene. In the SBI Bank's presentation, towards the end, there's actually a page on what they're doing in terms of, there are, I think, about 435 schools that they gave sanitary kits to. So I think P&G and Gillette is remarkable.
I think you spoke about P&G last time you were on the program as well. So
I think from the consumer pack, I think P&G is probably going to give you the highest earnings growth. I think 30-35% compounded for the next 2 years. That's partly because I think all the costs that they have that go into their business are going to come in their favor. So you're going to see almost a 700-800 basis point margin expansion that's going to lead to a 30% kind of earnings growth. So I think maybe more than PVR, this is probably what I would look at with slightly greater interest, so to speak.
This year seems to be like the return of the laggards, right? Whether it is capital goods, whether it's power stocks, whether it's railway stocks. I mean, everything's come back in a big way. So in this space, whether it's VHELs of the world, RailTels, whatever, what is your pick of the pack that are, despite the rally, you like even now?
So I think if we keep it to more on the mid and small cap side, Sonia, I think Solar Industries is something that we would still like. I think it's a remarkable company. Higher 20s in terms of return ratios, almost an 18-20% EBITDA margin. And now their defense orders are starting to kick in a fairly material way. So I think that is one that comes top of mind. The other is, of course, Triveni Turbines. Another stock that's done well, obviously they had that JV with General Electric for 0 to 30 megawatts. But I think even beyond that, what they have done is quite remarkable. And with biomass, sugar, cogen, and a lot of these other industries, a lot of these that are becoming hybrid industries, I think there's enough and more scope for Triveni Turbines to do well. I think if you look at the return ratios and margins of Solar and Triveni, they almost resemble a lot, maybe a mid-cap FMCG company, so to speak. And I was mentioning Power Mech projects a little earlier. It's in the erection testing and commissioning business, ETC as we would call it. I think even if you exclude the Adani order that they had got for almost $1 billion, I still think they'll probably compound their top line by 35-40% over the next couple of years. So again, not something that's coming to you at over 10 times valuation. And maybe a KC International. So I think these are 3 or 4 names that come to mind in the mid and small cap space on the capital goods side that look fairly interesting to us even at this point in time. Yep. Order books are very strong in most of these companies. So if you look at order book to bill in most of these companies, they'd be between 2 to 3.5, which is amazing with the kind of cash flows and balance sheet profile they have.
Rahul, what about the tech space? You're a little bit cautious on it. Tech stocks, I mean, they seem to be ignoring any kind of bad news, and even companies that came out with bad numbers, those dips got bought into. Some of those stocks are 15-20% post bad numbers. Your view on it, I mean, the risk remain, but the street seems to be thinking otherwise.
So I think there are 2 or 3 things here, Nigel. I think post the Q1 results, there have been some very large deal announcements, right, that have come through. So that's one that's positive. Second is this much talked about US recession with the chatter which started in October last year has not seen fruition yet. In fact, if you look at Friday's numbers, construction spending, the non-farm payroll and the ISM manufacturing, all 3 beat expectations. Thursday, jobless claims beat expectations, and earlier in the week, pending home sales and new home sales beat expectations. Right. These are the absolute freshest data points you're getting from the US in the last 1 week. So obviously, and the banking results were not too bad. Right. I think most of the banking results in the US were reasonably good. So I think that impending slowdown was probably getting pushed back further and further. Will it come? I don't know. But I think there was a period of underperformance that technology stocks went into. But I think the point here, Nigel, is that, as I was making the point to Prashant earlier, if you're not able to buy banks, right, and if FMCG is probably consumer staples is not going to give you a 10% kind of sustained growth, the only 2 other places in the market which are behemoths where you can park your money is Reliance and IT. So I think IT went through that period of consolidation. And I think even if I look at the downsides at our brokerage house, which Girish has printed, barring, say, an odd persistent or an emphasis here or there, the downsides on the large cap stocks for us are not very material. They'll be about 10 to 15%. So I think if you're a long-term investor, it's not a bad time to start nibbling into some of these names and building a portfolio around them.
Well, there's news at the bottom of the screen. This is sources to CNBC-TV18. The UP government may announce an increase in sugar state advised price, SAP. Basically, what the state, what sugar mills will have to pay for cane in the state of Uttar Pradesh, which is the largest sugar cane growing sugar sort of output state in the country. So this is negative for sugar companies. Now, how much, of course, is a question. But there was some chatter around this for a while, and this is now starting to finally show through. You will start to see, and we put out a piece on Friday basically looking at what, the government has been doing to control inflation on one side. But this, of course, is also to compensate farmers in a better way. Sugar, of course, is an extremely political commodity. And this is interesting as it starts to come through. As I said, negative at the margin, but how much, to what degree, etc., we will have to see. But this is source-based information, and we'll, I think, have Manisha join in to fill us in with more details as we go along. Any thoughts on this? And I wanted, apart from this, your thoughts on when we talk about consumer. Sula came to mind. I don't know if you've thought about, it kind of checks all the boxes in a sense, a lot of the boxes. Premium segment, niche market, low penetration levels, etc., etc. But any thoughts?
So while we don't officially track Sula, what I can tell you is that from a flows perspective and an interest perspective, there's a lot happening there. Okay. When I see some of the flows at our desk, and when we talk to people at when we discuss UNSP and UB, there's a lot of interest in Sula. The only point, Prashant, here is that wine as a sector or as a space in India, the market size is not that big. Right, compared to, say, whiskeys or vodka or beer, for that matter. So I think it's because, let's go back to the point Sonia was, discussing on Nazara. It's the only play that you have for wines in India, but I think it's a remarkable company to do what they have done. Our preference would still be towards a United Spirits or a United Breweries on a red part, not just because we track it, but I think if you look at glass, barley costs, etc., they're now coming in favor. So most of these stocks in consumer, Prashant, I don't think they're going to be top-line stories. They're going to be margin expansion stories. Most of these will expand their margins between 300 to 500 basis points, and you'll probably get a 16-18% kind of earnings CAGR in most of them. But this looks very interesting as a space. If the size can become bigger, then it'll probably do well. On sugar, I think we're 8 months away from an election, so I'd probably leave it at that.
All right. Rahul, appreciate your thoughts here on CNBC-TV18. Thanks a lot for joining us and hope to see you in the studio more often. Thanks for being with us.
Thank you for having me.